Let's talk about BuzzFeed. Now, I was surprised to find out that this company is still in business, and I decided to do a quick investigation to see how this company actually survives. And the quick answer for you guys is venture capital. Remember back in the day, there was so many of these garbage news sites, and a lot of them died off. However, Vice and BuzzFeed were able to carry on, and this is due to all the venture capital that was pumped into the business. And now they are operating in the free market here. They've done an IPO, and since becoming a publicly traded company, stock price of BuzzFeed has fallen by more than 50%. All right, and some of the numbers here, we can take a look at the free cash flow to see that they've been losing a lot of money. This is in millions of American dollars, and we can trace back the years here and see that they were losing a lot of money, ramping up, trying to get more revenue and grow the business. So they've been losing money in this whole process. And we can even see here for the latest year, if we take a look at this cash flow statement here, we can see they have the net income, and then they add back the depreciation and amortization because this is not a cash flow related expense, and then they also add back share-based compensation because this is not a cash flow related expense. They're printing more shares and paying the employees with that. So if we do not include this share-based compensation, and if they instead were to use a normal salary, well, then they would have been in the red for 2021 as well. I don't know who's accepting these soon to be worthless shares. Maybe it's management. Anyways, we can see that except for the year with the bear virus epidemic here, when it was at its strongest, they were losing money in free cash flow on a per share basis and on a total basis. And there's a lot of dilution going on. So just look at the total number of negative free cash flow here instead of at the per share number, because this will vary greatly. And in terms of revenue for the last 3 years here, we can see that it's been growing. However, if we take a look at income from operations, they have a cost problem. It's almost like they employ a lot of useless staff that's not doing anything, and they do a lot of expensive productions. So in terms of income from operations, we see that it's actually a loss. We have this parenthesis around the number for 2021 and 2019, with exception of 2020 here, which was a good year for BuzzFeed. Anyways, my opinion on this company is that it's not shorted enough. We can see that insiders here hold almost 50% of the total capital in BuzzFeed, and then a big share is held by institutions as well, and only a very small fraction is held by retail investors in the case of this company. And as of the date here, you can see April 28th, 2022, only 2.11% of the total amounts of shares outstanding is being shorted. And given that the float is not as large as it is with other companies, this large holding by insider here means that this can prop up share prices a bit, as there's not such a big float to trade out there. Anyways, that's just my opinion on the company. Not shorted enough, losing a lot of money. We will see how long this company stays in business. I hope you enjoyed this quick little research into BuzzFeed. If you, just like me, was curious on how they were able to stay in business, I mean, I operate a website also, and I know about the banner ads and how the profitability has declined a bit in later years. And it was this business knowledge that made me especially curious to see how this company still stays in business with losing all those monies, as I just showed you. Well, we know the answer. Venture capital, you can see in the numbers, they're compensating with shares rather than with dollar bills. The more you know, take care, and as always, invest safe.